Well, hello, everybody. Welcome to Notefellow. I'm so glad that you're with us, and I am so happy to introduce our guest today. Today, we have a gentleman by the name of Joe Varnadore who has been investing in real estate and various aspects of real estate, note investing for 30 plus years. He has a ton of experience. He's somebody I've gotten to know in the last couple of years, and I consider a good friend, a confidant, somebody that I can rely on and refer back to. Just it's always great to have somebody with this much experience a phone call away. So if you run into a situation, you want to get some help, he's a good guy to go to. So I'm going to bring him in and let's meet Joe.
Well, hey Wayne, thanks so much for having me, man. This is a blast.
Yeah, thank you. Thanks for coming.
Yeah.
So this is I've been wanting to do this for a while, and we've managed to get our schedules synced up.
We have.
And I think we could have a real interesting conversation. So, Joe, I wanted to talk about a whole bunch of different things today.
Yeah.
And I kind of wanted to start with your background. Kind of, we talked a little bit about how you got started in real estate, but I kind of wanted to share that because you got started at a really young age. You got started, it says here, at 19.
Yeah, so Wayne, growing up, I grew up in a little town called Okeechobee in South Florida, and my dad had the local Western Auto store, right? So he actually had 3 Western Auto stores, and so he was, like they used to say, you make your money in business and park it in real estate, right? And so that's what he was doing. So he encouraged me to do that. And so, yeah, at the ripe old age of 19, that was back in, well, it was a long time ago, in the late 70s, let's just call it. I bought my first property, and it was a fix and flip. And Wayne, you've seen some pictures of the befores and after, and this was certainly one of those crazy, nasty looking befores for sure. So, I started there, and between it was 1970, late 1978, in 1990, I did a lot of, little strip center. My father and I started our own family business to acquire rentals and did more fix and flips and just was having a blast. And I met a gentleman who introduced me to the note business, right, in 1990. And that, Wayne, that kind of made all the difference, right? It's not that, we continue to do, and I continue to do, real estate, regular bricks and mortar, every day. But, the note business really expanded things. And I'm glad the way that it's turned out as we continued to grow our note business, our family note business.
Right. So, you had this time from 1978 to 1990 where you're doing all these investing, and all that was just traditional real estate investments, right?
Mm-hmm.
Fix and flip. Did you ever do wholesaling or anything like that?
I did, and that was kind of in its infancy, but the fees weren't as big back then as they are today.
Right.
But it was crazy. So I started in 1978, and Wayne, by 1980, we've talked about this before. Mortgage rates on a first mortgage, they were 18.9%.
Yeah, and we think people right now are freaking out that rates are going back up to 6 to 7%. We've been spoiled.
And I was a young man just starting out at 19, 20 years old, but my gosh, yeah. And so I kid everybody when we're talking about now, like you just said, 6 to 7%. But Wayne, I was doing some research, and so between for the last 50 years, right, which would be what, 1970 to now, 1972, whatever it is, the average interest rate overall has been 7.77%. So we just had this period. It took a pandemic to have this period of crazy low interest rates, but and so what I learned then as I started doing that was that, if you were 18% at the bank, and most investors, even back then, Wayne, it was, and I found something, we were cleaning some stuff out 2 or 3 months ago, and CDs at the bank, certificates of deposit. Found an ad
Right.
stuff somewhere. 12% for a 6-month certificate of deposit, right?
Wow.
So we could finance somebody at 13, and they were like, "Oh my God, that's great! You know, it's not 19 at the bank." So yeah, I did that, and I love little commercial real estate properties, right? Some strip centers and so on, and we still have a couple of those.
Hmm.
Yeah,
Yeah. And what I've noticed, Joe, is I've kind of taken this journey myself of starting out with the traditional real
right,
estate and working in those aspects. And it kind of depends on what the market is when you get into the world of real estate.
correct. Yeah,
What I'm seeing is your mileage will vary. If
yeah,
if you decide to get into real estate in a down market, it's a completely different strategy, and there's more opportunities
hmm,
than when it's a feeding frenzy and you're
right,
trying to get in and you're doing what the teachers tell you to do, and oh, you need to be at this price point, and you're competing with people that have been in the market a lot longer than you. They've got their machine in place. They've got their marketing. They've got their contractors. They know what all their costs are. Their costs are pretty much baked in. They can walk into a house and they know, oh, this house is going to cost me 30,000.
right.
This one's going to cost me 10. This is a light one. This is 10. So when you're walking into that and trying as a beginner to compete with that, that's a really tall order
It
to
really is,
try to
Wayne.
compete with that.
Yeah, and we see people like that all the time, So I did a little wholesaling, between 1978 and 1990, but started a company 91 called
Hmm.
Charter First Funding, right? And so ended up between, I kept it for 10 years and ended up being one of the top 10 note brokers, note wholesalers, right? You can
Right.
wholesale a house or you can wholesale a note. You're just flipping a note. But
Hmm.
the cool thing is that I had, a network kind of around the United States, and I never had to go look at a property. I never had to, I was just flipping the paper. I wasn't flipping the house, and
Yep.
did that really well, and just and continued to grow that note business, and continually as well to grow the rental business, the house rental business as well during that same period of time. And then all the while continuing to do a few fix and flips here. But yeah, Wayne, when you walk in, you don't know what you don't know, right? When you're brand new. I mean, I did have the I had the ability to have my dad and other people that I had known in the trades and so on, and
Hmm.
so it was good for me. But I know that that's a big thing to swing, especially today, with the way the market is kind of panning out at this point.
Yeah, and sometimes I will admit too, if you get into the real estate part of it at a young age,
Mhm.
19 to 20 years old, you don't know what you don't know, and you don't care that you don't know it.
Right.
You just remember how you were at 19. You
Yeah.
just you don't care. You're just hairs on fire, just going after stuff. When you get older, what happens is, well, logic and reason start creeping in. When you're 19, there is no logic and reason. You're just blowing and going.
You're blowing and going, even, and I mean, I did that till I was, almost 30 years old, and my deal was the next fastest car, right?
Yeah, yeah,
And I was an aspiring young pilot in an airplane, and and stuff. I wasn't, you know,
yeah. you were
whatever.
you weren't
Wasn't
thinking about
married. Yeah,
retirement. You were enjoying all the profits of your
at
work.
that point, yeah, right. I
Yeah.
didn't have a young family, and so yeah, there's a little bit of difference there. And then,
Yeah, whereas
um,
whereas me, I was an engineer for 30 years.
yeah,
I had went down the path of, hey, go to school, get an
mhm,
education, go get a job.
mhm,
And the market changed. In the 1990s, I had no idea what NAFTA was.
right,
And some people still don't. It was a North American Free Trade Agreement.
right.
And that opened the door for companies to be able to move into Mexico and other countries and then ship their products back. So factories started slowly closing.
Yes.
And so I found myself going from job to job to job, even though I was thinking when I got into engineering, hey, this will be a steady career,
Right.
because it used to be. Prior to that, engineering was very steady. Now, I will say it was still good to me because I was able to take my experience and my education and
Yeah.
move from one company to another.
Right.
So it panned out. I finally hit a point after 30 years that I was just tired of all the corporate stuff that comes along with working in a corporate job.
Right.
And I just wanted something different. I just
Right.
knew that I didn't want to do for another 15 or 20 years what I had been doing for the last 30.
You
So
know,
an
Wayne.
opportunity came up for my wife and I to change course,
Yeah.
and we did. And it really took hold whenever I found notes. I was still trying to do my engineering job and real estate at the same time, because let's face it, you get up to a certain point in life, well, you've got a family, you've got
Mhm.
bills, you've got responsibilities and things.
Yeah.
So it's very hard to turn the one cash flow off without having something else to kind of take its
Yeah.
place.
Yeah. And you know, that's what we see, you know, folks, it's kind of like everybody wants to be in real estate in some, I mean, whether you're getting in a taxi cab or an Uber, and oh, what do you do? Well, I'm in real estate, and no, oh my God, you know, and then
Yeah.
you're in line at a movie or at a restaurant or somewhere everybody wants to be, and that's all they want to talk about. So
Right.
sometimes you just don't bring it up, right? But it's like everybody is so excited. And of course, we can thank HGTV, right?
Right. Yeah,
You
exactly.
know,
They've really glamorized it, haven't they?
woo! It's because it's so easy, right?
Oh, yeah. Yeah.
But yeah, so you know it's a different lifestyle, because in the note space you're being the bank, right? And you can
Hmm.
be very creative. What I've found in my many years of being, you know, in the note space is that very few people, you know, you talk to 100 people that are in the real estate investing space, and maybe 3 of them have some kind of understanding as to what the note business is, right? So
Yeah.
you know, I'll say, well, have you ever sold a house, you know, using where you financed it for your buyer? And have you ever bought a house where yeah, I did buy a house where the seller financed it for me? Or, you know, have you ever bought a note that's not performing? And people go, what? Why would you do that? Right.
Why would
And
you buy a dilapidated house that was going through
why would you
foreclosure?
buy it? You can buy an ugly house, you can buy an ugly note, and guess what? You can make a lot of money doing that.
Well, and Joe,
So
that's what stuck out to the engineer
yeah.
in me, because
Mhm.
what do engineers do? We push paper, right?
Right.
So when I found notes and really found a group, a network that and a mentor that could explain it to me well enough where I could kind of wrap my head around it, because
Mhm.
that's really why so many people don't get into notes, is because it almost feels like
Right.
the dark arts of
Mhm.
real estate. It's
Right.
it's all the numbers and the different things that go with how you process notes, and the different, just there's a lot to note investing. It's not one dimensional. It may be even four dimensional if you want to go that crazy with it,
Well,
because there's
yeah,
so many strategies to it, and
there's a
pretty much
lot of aspects to it that people just they don't get, right? I mean, it's
right.
just so you know everybody always says, well, you know, the banks, they've got all the money. Well, you know, they're real estate transacts in 2 ways, right? You've got the buying and selling of a piece of property, and then you've
Right.
got the other side of that is the financing part of that. So you're just dealing in that, and there's you know you can go out and you can buy a note from somebody. Maybe it's your grandma and grandpa that sold their house with seller financing, and they
Right.
received 2 or 3 years of payments, and they have a life change, and they want to sell that. So you can buy an existing note, or you can go out and you can become the bank. You just simply sell a property or buy a property and resell it with seller financing, and you're receiving monthly cash flow.
Yeah.
And or you can buy a non-performing loan and again, the reason you buy a non-performing loan, right? It's a one-word answer, right? It's price. You're buying it at about half 40 to 60% of what the property is worth. So,
Mhm.
that's the value buy. And, we talk about, the old days in non-performing stuff back between 2008 and 2014 or so. That was the value buy. There were REOs, right? Real estate owned, where you were buying the property from the
Right.
bank, or you bought the non-performing note. And man, that was an amazing thing. And we're entering back into another season of that because of the pandemic. And Wayne, you entered the note business right as the pandemic was starting, right?
I did. I entered the note business right when the pandemic was just getting going, and my wife and I kind of had an exit strategy that we'd laid out a 2-year exit strategy for me to retire from engineering
Right.
and for us to be able to focus on real estate notes full time.
Right.
So all COVID did for us was delay our plan about 6 months. We
Right.
stretched it out about 6 months before I did retirement. But once you kind of get that countdown clock going in your mind, you're going. And I just decided, look, I've got this plan in place. The wife's on board with it. We're doing it. We're going to make it happen, because that's really the best way that I could be effective at this and grow a real business, is to focus everything into it. And
Wayne,
the
you
same
have
with
to.
raising private capital. I think that is one of the things. If you go back in some of my videos that I've previously done, one of my titles that I've used a couple of times is "Learn How to Be the Bank,"
Mhm.
and I'm pitching to people with dry powder sitting on the sidelines that's not earning any interest. Let's put that money to work,
Yeah.
because unlike stocks, unlike other things, with notes you can invest in a performing note
Mhm.
and earn that cash flow month after month. And
Right.
I'm never saying that, hey, rentals are no good, stocks are no good. I never say that. It's always, look, note investing is another pillar in your investing portfolio.
Oh,
And I
absolutely.
think everybody would agree the smartest thing you can do is diversify yourself into different asset classes,
Mhm.
and as many different asset classes as you can. And notes are another asset class. Even
That's
if
right.
you have rental properties,
Yeah.
great, fantastic. But you can add note investing on top of that and just have another stream of cash flow.
Right.
And Joe, as you know, you're not worried about tenants or toilets.
Mhm.
And unless the homeowner just stops paying, you don't have anything to worry about. All you do is collect a check every month. And that is something that I've experienced. It's really great.
Yeah. Wayne, it is. And, from a perspective, from my perspective, we had almost, a little over 100 rentals that I
Mhm.
started converting about 8 years ago into notes, either selling them to the people that had lived there. They
Mhm.
had been tenants and they had been paying, and they paid really well, and wanted to have them, own a house. And then some I sold to turnkey investors, folks that just they were looking for an investment to make, and they would buy it and they would keep it as a rental. It's not that didn't really like it, but what I found was that it's a lot easier to manage a bunch of notes, right, than it
Mhm.
is to manage a bunch of houses and tenants, right? Because
Yeah.
you can pay a professional servicer 20 to 30 bucks a month to manage your note for you, right? Which is
Right.
collecting the payments and the taxes and the insurance and making sure they get paid. And typically, if you're going to do that, you're going to have the borrower, that's part of their monthly payment, is that servicing fee, that because it behooves them as well.
Yeah.
So you get, when you get a check, and hold on just a second. So there no checks, right? They pay the servicer. My servicer wires that money into my account. So it's not like
I have
I
one
don't have to
servicer
go to
that
the
still does.
mailbox, Wayne.
Hey, Joe, I'll correct you. There is one servicer out there that still mails checks.
Yeah. Oh, really?
Yeah, I still get a check. Now, I have other servicers that wire the money into my account, but I've
Right.
got one that sends a check.
So that's truly passive for people that are looking for that. And
Yeah,
Wayne,
it is.
you were talking about, Pat, about, raising capital. Wayne, there has never been more capital out there sitting dry, whether it's in somebody's tax deferred account, a Roth, a 401k self-direct, a HS health savings account, or a Coverdell education account, or just sitting in a money market account. Right there's,
Right.
I think I read a couple of days ago. I do a lot of reading. $4.7 trillion, and these are a lot of folks that they're not. Let's face it, they're 60 to 90 years old, and they want to invest in something and get a good fare, a 6-7% rate of return on a monthly basis on an asset that's real, right? I mean, it's not like you're buying, and I'm not knocking down buying stocks. I have friends that are, going crazy with that, but they're active doing it every day. I mean, they're trading and trading and trading.
It's not passive.
It's not passive, right? And they're like, yeah, if I can get 6% or 7%, I'm all in, and it's a great investment. And so there's and you never know. I talk about that sometimes. People say you never know. It may be a retired police officer. It may be a retired, somebody that works for the Postal Service, a nurse, teachers. All of these folks have money, and they really want something that they sleep a little better at night, right?
And maybe, like you said, they don't want to be so active where they have to worry with it, and they have a life they're trying to live. They got things on their plate that they're worried about. But at the same time, they still have this chunk of money that they'd like to be growing and not just shrinking over time.
Yeah.
So it's a great opportunity. And that's what I say on my videos. And when I talk to people, it's like, look, I can give you a truly passive investing opportunity where you can earn monthly cash flow, and you don't have to worry about it. But your cash flow is backed by a real piece of real estate. If anything went wrong with it, I have a piece of real estate that I can take back, and one way or another, you will be made whole. You're not going to lose your investment. I'm not going to leave you hung out to dry. I've had that happen. I know how that feels. So I wouldn't want to be responsible for doing that to somebody else, Joe.
Well, you're right. And, that's, the old corny saying about, why do you like real estate? Because it's real, right?
Yeah.
But it is. And notes are real as well. And we just find that, I've seen over the years of being in this and, teaching people about this and doing it myself, that it's just a lifestyle that a lot of people gravitate to at some point. Some of the younger folks saying, well, we're going to do some wholesales, but at the end of the day, it's not it's a transactional business, right? When you're doing notes or building wealth by, accumulating notes or, whatever you're doing in the note space, it just makes it, where you've got something where you can build wealth. And, today, where we're sitting today, it's an interesting market, Wayne.
Oh yeah, for sure. So something I want to share real quick. So we kind of worked up some things ahead of time just to kind of share. And one of the things I wanted to kind of look at is, the stock market. And one of the things that's interesting, Joe, is people say that they don't want to invest in paper, but people do that with stocks. People do that with gold. There are paper versions of gold you can buy. That paper is backed by the real gold, but you've invested in the paper. And that is very common, isn't it?
Well, it is. And Wayne, the thing about whether it's if you've bought a rental house or you've got a note on a house, it's something that's tangible. And I don't have to, if I bought a stock and, Putin invades Ukraine, or, it doesn't rain in subterranean Africa or whatever it is, that's really not going to affect the value of my house so much. But the markets are so cyclical, the stock markets are so cyclical. And I mean, that's a hedge fund game today, right? I mean, really, it is. It's they're moving billions and trillions of dollars. Yeah,
Oh yeah, yeah, and you can see here in this chart, you can see we have we are on a slow tick down.
yeah,
We see little rebounds, but we are on a slow tick down. And I think for somebody out there who's maybe 55 years old and has a company 401k, that's got to
right,
worry you. Because I remember in the downturn of 2008, there were people that were very close to retirement that had to put their retirement off for 10 years
right.
trying to build that 401k back up to where it was before it took the sharp decline.
Yeah.
And
Yeah, things change. Things change when you're in the market and you have somebody else that is making those investments for you. And that may not be in your best interest. They may not be acting in your best interest, right?
yeah, and there's a lot of fees associated with a lot of those company 401ks that they make money off you whether the stock is going up or down.
Right.
So something else I thought that was interesting, Joe, was we were talking about go over here some of these articles. So just kind of talking about what's going on in the market right now. We've got small mortgage challenges. Some prospective homeowners are turning to alternative financing.
Right.
And this is just an article that outlines and discusses, as the markets are changing, as the housing market is changing, it's putting more pressure on home buyers, and fewer are being able to qualify. So what that's doing is that's forcing them to look at alternative financing like mortgage notes.
That's right.
And note origination is starting to go up. So as that goes up, what that tends to do is it starts, those notes eventually work their way out into the market, because you don't have the big banks, Wells Fargo and Chase, that are creating all these notes. Now you have a lot more mom and pop or guys who do fix and flips. And maybe these guys who do fix and flips, once they're at the flip side of it, they can't find somebody to qualify.
Right.
So what's the best thing for them to do? Well, they can create their own note and qualify the buyer themselves. And then at a future time, if they decide, hey, I need to recapitalize my business, they can sell part of that note or that entire note
Right.
to an investor like me. And then I can take that money and I can take that cash flow and put that in line with a private investor.
Right.
And so it's just the note.
Well, there's so much
good.
leveraging that goes on when you can when you own a note. Just like you said, you can buy 300 payments of a note and sell 100 payments or 200 payments, or
Right.
There's so many different aspects of all of that. And right now, the biggest thing is affordability, right? Is people being able to afford. When, the year has changed, 2022, from January, you can get a sub 3% loan, to today where you get a 7% loan. You're talking about, on a $350,000 loan, that means the payment's $700 more a month for the same loan, right?
Right.
Because of the difference in the interest rate, and it's just an affordability thing. And so we see a lot of folks that are, this is a great way for them to invest and to get rid of a property.
Yeah, and I'm going to take a second and switch us back and show the slides that you provided.
Yeah,
and we're kind of tied to that is you see the loss in mortgage jobs. You have all these mortgage companies because of this tightening that's happening in the industry.
right.
And look at this. I mean, 3,200 mortgage jobs lost in July, 4,000 in August.
Mm-hmm.
Overall, 27,000 jobs lost in the last 12 months.
And again, it's because it slowed down, right? The whole buying frenzy has slowed down, simply because it's people can't qualify. This goes right along with it. It goes with qualification, and it goes then with debt to income ratios and so on. People would have to stretch to get in when you can buy the same house in January, not 5 years ago. We're talking about January,
Right.
and your payment is $600 or $700 more a month just because the interest rate has more than doubled. That's a big deal, and that's where we can step in with some of this with this seller, showing folks how to create seller financing or doing those kind of thing. It just makes it more real, and it's because we're that alternative, right? When
Right.
things have gotten challenged, seller financing and note creation has thrived. So this is
Yeah.
really a great time for that, and to be in the business, and especially if you don't want to be in the business, to become a passive investor with somebody like Wayne, who's building a note company.
Exactly.
Yeah.
Let's see.
Yeah, this mortgage credit availability, you look at that, and Wayne, we're right here about the same as it was when the housing market crashed in the fall of 2007.
Wow.
And you see that it went from where anybody could get a loan from 04 to mid 07 to where
Right.
nobody could get a loan, and now we're back down there. And so it is harder. It's harder as affordability is just crazy. And a lot of people are, well, is the housing market going to crash? No, it's not really going to, it's not going to just crash and come falling through the cracks, because there is an inventory shortage. There's still not tons of houses for sale on the market out there. So
no, and for me, when I look at buying notes, Joe, I'm looking at buying notes. Look, buying a note is just like buying a house. You make your money on the buy.
Mm-hmm.
The buy price is so important. And so as a note investor, what I'm looking at is buying that note at the right price, so that even if the home value goes down a certain percent, I still have enough margin in the deal. I still have enough of an equity position so that I don't have to worry about that loan being underwater.
Right. Well, so regular, notes that are performing loans, right? They're
Right.
traded at a discount, right?
Yep.
And the non-performing loans are traded at a bigger discount, right? So
Right.
I don't mean to go back to non-performing, but yeah, all notes are traded at a discount depending on how they were created, right? I mean, if it's
Right.
just, just because I like Wayne, and I'm like a used car dealer, I go, oh, well, no credit, Wayne, no cash, no problem, I'll finance you. Well, that's not the way that's not the way you build a sustainable business. You use the tools that are out there and that about, the RMLO, MLO, mortgage loan originators, to make sure your borrowers can pay you back. So it's not like we're just throwing something up against the wall to see if it sticks. We're doing this in the right way, and so
Exactly.
it's a great opportunity for folks that want to invest in something that really that's substantial. And if the house is worth $250,000 and the borrower owes $200,000, and we buy that note for $170,000, well, there's a lot of room between 170 and 250, right, Wayne? So
right. Exactly.
there's a lot of safety net there.
Exactly. And it's just prudent on my part to make sure that when I buy these, that's what I'm doing. I'm following that. And the nice thing is I found a network of people, that has Joe as part of that network that, is full of mentors and also fellow investors that are real estate investors, note investors, and they're located all over the world, or all over the United States. I say all over the world because you got Gary Corbin, in Portugal. So we've got people that are all over, and
we've got people in the Middle East and Israel and Australia. Yeah, I mean, in that notes in the note school family, right? And
right. And so what I do, Joe, is I don't limit my market where I'm buying my notes. I have notes in Ohio, Alabama, Michigan, Texas, Ohio. I think I know you said Ohio. Just kind of wherever the numbers make sense.
Right.
You don't have to be focused on just your market. And at the same time, I'm building my network where if something did happen,
Mhm.
I've got boots on the ground that I can put into place. And
Right.
that's all part of building this network. And it's kind of your network is your safety net, right?
Your network is your safety net. And then the folks that are in this, look, Wayne, all banks use a third party to service, right? Because
Mhm.
they don't want to fool with that. Citibank was the last one, and then they, transferred all their servicing, receiving the monthly payments and managing escrow accounts and getting out the proper tax documents and all that. So they then transferred that over to NationStar, who then changed their name to Mr. Cooper, right?
Right.
And so that's the way that you can scale a business. Is you have these, you're using the same folks that Bank of America or Wells Fargo or Fifth Third, and it just gives the, whether someone's investing with you in buying a note, or buying a note for you, or buying a piece of a note for you, then you've got that licensed and compliant third party out there that's what they do,
Right.
right?
Yeah.
That's what they do, and they
Exactly.
have the proper licenses and they're compliant to make sure and do that. So
Yeah. And so I agree 100%. That gives the safety. So it's safety for me and it's safety for my private investors as well.
yeah,
So Joe, just kind of wrap it up here because I want to be respectful of your time.
uh-huh.
Um, want to just let everybody know that. So this is my website, Joe. I think you've seen
Yeah.
this
Oh,
before.
I love, yeah, Note Fellow.
So if you're interested in finding out more, maybe you want to see what opportunities I have. You've got some dry cash on the sidelines. You're looking to put that dry cash to work and start getting a cash flow, get a return on that. Then there's ways to contact me. The easiest way to contact me is to go to my website, www.notefellow.com, and you can schedule a call with me. This pulls up my calendar, and you can literally just make an appointment in my calendar with me, and we can have a one-on-one conversation about what your situation is and see what that looks like for you. Because I'm honestly interested in what can I do for you? How can I help you grow your portfolio and improve your life and get cash flow for you? I honestly, Joe, feel like that I'm just of the mindset that if I help others, then it just naturally will come back around to me. But
Well,
I
Zig
really
Ziglar says,
believe in help
Wayne,
others first.
that's right. Zig Ziglar says, if you help others get what they want, then if you help others get what they want, you'll always get what you want. And
Yeah.
that's got to be your mantra as you're in this. And I can tell you that Wayne he's gotten into this business, and he is just you know he's just ran with it, and just been like just a sponge and soak this up. And man, you've come a long way in a couple of years, Wayne. And that's it's been a joy and amazing for me to watch you as you've grown, and you've built, you're building a business for you and your wife Darla. Yeah. So
Yeah.
I'm happy for you. And I see that growth, and being able to help others and do that as well. So that's a good thing.
Yeah, for sure. And I appreciate Joe. I appreciate Note School. I know you saw on the bottom of the slides that had Note School. So
Yeah.
that's that's something that Joe is a big part of. That's I don't know, how many years have you been involved with Note School now, Joe?
Yeah, so I've known Eddie Speed that founded Note School since the mid '90s. We used to. I had Colonial, or he had Colonial Funding Group. I had Charter First Funding, and we
Yeah.
competed pretty heavy back then.
Okay.
But I've been involved with Eddie in Note School since for about almost 9 years. Yeah,
Maybe
it's
nine
gone
years.
by so
Wow.
quickly, and it's something that I do, and I enjoy, because I get to meet people all over the country, people like
Hmm.
Wayne. We probably would have never met had it not been for Note School.
We wouldn't
The
have.
likelihood of that, yeah. And so it's cool to hang around with like-minded people, and that people that you respect, and you have a level professionalism. It's really neat to be able to do that. It's been great for me as well. So
Yeah, and it provides for people like me. It provides this fantastic network and an incredible resource.
yeah,
So there's no problem that I'm going to encounter that I can't lean into a resource to overcome that problem.
yeah,
And let's face it, if you're trying to raise money and I don't believe in going about the aspect of, oh, I've never lost money or I've got all the answers. I think I would be cautious with somebody that made those type of
absolutely,
claims. And so I never
absolutely.
make those claims. I never claim that I have all the answers. I just
Right,
claim that I have resources that have the answers. And so I will lean on my resources
right.
to overcome those problems, whatever
Yeah.
they end up being.
And it's all about, Wayne. It's all about being transparent and making sure that folks that if they do, would choose to, invest in a note, that that they're going to do their proper due diligence, right? They're going to make, get their own opinion of value on the house and just look at those different things just to make sure that it's right for them, right?
Right. Exactly. Exactly. That's what it's about.
Very good.
Well, Joe, thank you so much for your time today.
Been my
And
pleasure.
we're going to go ahead and sign off, but have a good day and we'll see you next time, Joe. Thank you so
See
much,
you.
buddy.
Thank you.
So we're going to end. Thank you so much for your time today. Look forward to seeing you on the next live stream and have a good day. Have a great weekend. Bye.